You know that feeling when you open up an investment app on your phone?
Hmm.
You see a stock you like, maybe some big tech giant, and you hit that little green buy button.
It feels so easy, doesn't it?
Yeah.
Almost instantaneous.
Yeah.
You tap the glass, a number changes, and you get that little rush. You feel like you own a piece of something.
Exactly. It's so clean, so simple. But today we are going to completely ruin that simplicity for everyone.
We are, because behind that button is this massive, churning industrial machine that most people never ever see.
It really is the engine room of global finance.
That's a good way to put it.
So today we're doing a deep dive into Temenos T24, and specifically its securities module. Now, I know securities module sounds a bit
A
dry,
little bit, yeah.
like something from a dusty manual, but this is the software that actually moves the money for huge private banks and financial institutions.
It is. And to do this properly, we've gone through a stack of pretty heavy technical training documents, specifically the T24 Securities course materials. These aren't, pop science articles. These are the manuals that teach bank employees how to handle millions of dollars in trades without losing a single cent.
So our mission today is to decode that chaos. We're going to trace what happens from the moment a trade is requested to the moment the money actually settles. And spoiler alert, it involves a lot more than just buy and sell.
Oh, it certainly does. It's a logistical nightmare that has been turned into a very, very strict software process.
Okay, so let's start with the landscape. What exactly is T24? The documents call it a modular core banking system. That sounds like a lot of corporate speak.
It does. But think of T24 as the operating system for a bank.
Okay.
Just like your phone has an OS that runs different apps, one for messages, one for photos, T24 has different modules for different banking functions. There's a module for loans, one for deposits, and the one we're looking at today, the securities module.
And just to be clear, securities in this context isn't about security guards.
No, absolutely not. We're talking financial securities.
Shares and bonds.
Exactly. Debt and equity instruments. This module manages the entire life cycle of trading those things, from the initial order to the trade, all the way through to settlement.
And the documentation mentions it's running 247.
That's the whole point. It's built to be operational around the clock. I mean, if you think about it, global markets don't stop, right?
Right. When New York closes, Tokyo's waking up.
Exactly. If the system went down for 8 hours of sleep, the bank would miss entire trading days in other parts of the world.
Now, there's a distinction in the source material that I found really interesting right away. It's how the system treats client trading versus own book trading.
Yes, this is a critical concept. Client trading is, well, it's exactly what it sounds like. The bank is executing a trade on behalf of a customer.
So you call your broker, you use the app, you say, buy me Apple. The bank is just the agent.
The agent, the messenger, yes.
Yeah.
But own book, that's different.
That's the bank playing with its own money.
That's the bank trading with its own money. Banks aren't just intermediaries. They're investors too. And the system has to distinguish very strictly between, is this for Mrs. Smith's retirement fund or is this for the bank's own profit?
I imagine the accounting rules for those two are completely different.
Totally. The risk, the reporting,
Yeah.
everything. T24 has to keep them completely walled off from each other.
Okay, so we have the playing field. Before we can actually trade anything, the documents talk about these static tables. This feels like the setup phase.
It is. It's like setting up a really complex board game. You need to know who the players are, what the pieces are, and the rules of the world before you roll a single die.
And those tables are the brain of the system.
They are the brain. The documents list a few key ones: customer, account, and currency.
So basically, where's the money, and what money is it?
Pretty much. The customer table doesn't just list names. It assigns roles. A participant can be a buyer, a seller, a broker, a depository, or even the bank itself for that own book trade.
So everyone gets a label. If you're not in the table, you don't exist in this world.
You don't exist. Then you've got account, which is where the money is coming from or going to, and currency, which handles the exchange rates in real time.
There was a detail about validation here that I loved. It's like the system has a bouncer at the door.
That's a great analogy. When a trader tries to input a trade, T24 runs a check. It validates the security ID against a central list. It asks, is this a real stock? Is it traded on this exchange? Is the currency correct?
And for bonds, it goes even deeper, doesn't it?
Much deeper. For bonds, the system has to pull all the interest details for accrual calculations, the start date, the interest rate, how it's calculated. It's not just buying a bond, it's calculating the entire math of that bond in that moment.
So it prevents you from buying something that doesn't mathematically exist.
Precisely. It protects the bank from human error.
Okay, the board is set, the players are defined, the bouncer's checking IDs. Let's actually buy something. Phase 2, the life cycle of a trade. Step 1 is the order. This is the front office. A client wants to buy. The documents list a few order types. We have the market order,
Which is the standard one. Buy it now at whatever the price is. That's what most of us do on an app.
then the limit order.
That's for the more careful investor. Buy it, but don't pay more than $100. It sets a price cap.
And then there's the cash order. This one felt a little bit different.
It's really practical, actually. A cash order is when the client says, I have exactly $10,000 to invest. Buy as many shares as that gets me.
So the value is known, but the quantity is the variable.
Exactly. The system has to work backward from the cash amount, factor in the price and fees, and figure out the number of shares.
So I place my order. What's its status in the system at this point?
At this stage, it's just transmitted. It's only a request. It's an electronic message sent to a broker. Nothing's actually happened yet.
Okay, speaking of brokers, step 2. This is where it gets efficient. The system doesn't just send every order one by one, does it?
Not always, no. This is the beauty of the bundle. Imagine you have 5 clients who all want to buy Apple stock. And maybe the bank's own book wants some too.
It just rolls them all together.
T24 can consolidate all those requirements into one massive order. So the broker just sees, buy 5,000 shares. They don't see all the little pieces.
Which gives the bank more leverage, I'd imagine.
More leverage, better pricing, and fewer commission fees. It's much cleaner.
And there's a shortcut here for the bank itself, right? The direct trade.
Yes. For on-book trading, banks often just skip the whole order stage. They don't need to place an order with themselves. They just input a direct trade straight into the system.
That makes sense. Okay, so the order is with the broker. Step 3, execution. The middle office. This is where reality hits.
And reality is messy. You might want 5,000 shares, but the broker might only find 2,000 right now.
So you get a partial execution.
Exactly. T24 has to handle that. It fills what it can and leaves the rest of the order open.
And it can get more complicated, right? What if one order is filled by multiple brokers at different prices?
That happens all the time. The market moves second by second. So T24 has to calculate a weighted average price for the whole transaction to ensure all the customers involved get the same fair price.
There was a technical detail here I wanted to highlight. When the execution happens, the system creates these records with a specific status.
You're talking about IHLD.
Yes, input hold. What is that?
Right. When an execution is authorized, the system creates these records in IHLD status. And the IDs, they start with SCTRSC.
Which sounds like a secret code.
It probably stands for Securities Trade Service, something or other. But it's basically a staging area. The system is saying, okay, I have the data from the broker. I'm holding it right here while I verify everything before I post it to the main books.
So we've ordered, we've executed. Now we're in phase 3, completion and settlement, the back office. This is where the accountants get really interesting.
This is where we make sure the math actually works. And the first thing T24 does is what's called a zero-sum check.
Which means?
It validates that the total quantity to buy equals the total quantity to sell. Simple as that. If 5 investors are buying 1,000 shares each, the system demands that the brokers sold exactly 5,000 shares.
Seems obvious, but I guess you need that hard stop.
Absolutely. You can't create shares from nothing. If the numbers don't match, the whole trade is halted.
Now let's talk settlement. This part really made me pause. There are 2 ways this happens: contractual settlement and actual settlement.
This is a fundamental concept. It's really about trust versus certainty.
And contractual settlement is described as the optimistic approach.
That's a good way to think about it. In contractual settlement, the system just assumes the trade will settle on its due date. So it goes ahead and debits the buyer's account and credits the seller's.
Wait, it updates the accounts before the bank physically confirms the cash or shares have arrived?
Essentially, yes. The positions are marked as settled. The bank is just trusting the system. It's faster, it's smoother for you, the customer. You see your shares right away.
But then there's actual settlement, the realistic approach.
Actual settlement is for when you want to be absolutely sure. Maybe it's a huge trade. In this model, the system generates what are called suspense entries.
Suspense entries, what are those?
They're temporary accounting markers. The system is basically saying, we think this transaction is happening, but we aren't going to touch the real customer accounts just yet. The positions stay marked as unsettled.
So nothing is final until...
Until the depository, the external vault holding the stocks, sends a confirmation that the securities have physically or at least digitally moved.
So you don't get the credit until the check clears, basically?
Basically, once that confirmation arrives, the suspense entries are reversed and the real money moves. It's safer, but it's slower.
There's one more safety net I want to mention. Price deviation.
Oh, yes. The override.
So the system is watching the market. If you try to execute a trade at a price that's way off from the current market price...
T24 throws up a flag, an override. It stops the process and says, hey, the market says this stock is $100, but you're trying to buy it for $150. Are you sure?
That's amazing. It's the system saying, are you drunk?
Are you sure you want to do this? Exactly. It prevents fat finger errors, like typing an extra zero, or even fraud.
So we've settled the trade. Now we get to management and reporting. How does the bank keep track of everything it owns?
It all starts with a portfolio.
And what is a portfolio in T24 terms?
It's just a specific basket of assets for investment. But the key point is, a single customer can have multiple portfolios.
Right, like one for retirement and one for more aggressive trading.
Precisely. And in T24, the portfolio number is usually just the customer ID followed by a sequence number. So you might be 1001-1, 1001-2, and so on.
Simple enough, but how do they actually see what's inside those baskets? The sources talk about inquiries.
Inquiries are just the different views or reports in the system. There's the position summary, which is the master list of everything held. But then you have something more specific, like positions by depository.
Why does that matter?
Because a bank might use several different external vaults. They need to know exactly which vault holds which stocks for which client. It's inventory management on a massive scale.
And of course, there's a separate view for own book positions.
Yes, to track the bank's own investments, their value, their performance, all kept separate from client money.
Okay, finally, we have the end of day, the CABI close of business. What happens when the lights come on?
The system cleans house. The CABI is this huge batch process that runs overnight, and it generates 3 critical reports. First, expired orders.
Orders that never got filled.
Right. A limit order that was never reached, maybe, they get purged from the system. Second, executed orders, the success list. Here's what we did today.
And third,
pending orders, the ones that are still in limbo, partially filled or still waiting for a price match. It's the to-do list for tomorrow.
It sounds like a daily audit of success, failure, and what's left over.
It is. It ensures that when the system starts up the next morning, the books are balanced. If something's wrong in a TOB report, the bank can't open for business until it's fixed.
So let's try to bring this all together. We started by saying T24 is the engine room. What's the big takeaway from all this?
For me, the takeaway is that the T24 Securities module is a dynamic environment that is designed purely to manage friction.
Friction?
Yeah, the friction between what we want to buy, that's the order, and what actually happened, which is the settlement. T24 bridges that gap with all these validations and suspense entries and checks. It's not just a passive ledger, it's an active referee.
It's the structure that allows the chaos of the market to actually function as a business.
That's it. Without this kind of rigorous structure, without the static tables and the zero-sum checks, global finance would just fall apart. T24 ensures the math actually works.
And its relevance is, well, we all live in a world where we expect instant financial gratification. We hit buy, we expect it to be done. This is the machinery that makes that possible without the whole system collapsing.
Exactly right. It turns the noise of the trading floor into a tidy, balanced spreadsheet.
Now, before we go, I want to leave our listeners with a thought. We talked about contractual settlement, that idea that the bank credits your account before the money has actually physically arrived.
The optimistic approach.
It is, but it makes you wonder, when you look at your account balance on your phone right now, how much of that money is actual and how much of it is just a contractual promise from the software? How much of your wealth is just an entry in a database waiting for a depository somewhere to catch up?
That is a very provocative question. Probably a good one to end on.
Thanks for listening to this deep dive into the plumbing of the financial world. We'll see you next time.
Good.